What does it look like when nearly 3 times the money floods into Indian startups in a single week? Spoiler, it looks exactly like last week. Between April 6th and 10, 2026, 23 Indian startups collectively raised $360.5 million. Now, that number alone sounds solid. But here's the part that actually stops you mid-scroll. The week before, the entire ecosystem raised just $131.5 million. That's a 174% jump in 7 days. Not a quarter. Not a year. 1 week. The money flowing into Indian startups nearly tripled overnight, and that is not normal. So what happened? One company happened. KreditBee. A fintech lender, meaning they give out loans digitally, no bank branch, no paperwork mountain, raised $280 million in a single round. To put that in perspective, that's roughly 78% of everything raised that entire week going to one startup. And with that raise, KreditBee crossed a $1.5 billion valuation, officially becoming a unicorn. That's the term for a privately held startup valued above $1 billion. It's only India's second unicorn of 2026 after JustPay. But here's why you should actually care about this, especially if you run a business or you're building one. Funding surges like this aren't just headlines. They're signals. Think of them like a weather forecast for the business climate. When venture capital money, the kind of risk-taking, high-conviction investment that backs early-stage startups, pours into sectors like fintech, AI, and clean tech, it means sophisticated investors are betting those spaces are about to grow fast. And when those spaces grow, the tools, platforms, and services built on top of them get better, cheaper, and more competitive for everyone. The remaining $80.5 million, by the way, spread across 22 other startups: AI, e-commerce, clean tech, including Astronova Mobility in the clean energy space. So this isn't just a KreditBee story. It's a broad signal that India's startup engine is firing on multiple cylinders right now. So who exactly is getting this money? And what are they building? Let's break down the key players and what their raises actually tell us about where India's economy is heading next. Now let's zoom in on one name from that list: KreditBee. Because honestly, what this company is doing is a masterclass in what modern lending actually looks like. Here are the numbers that matter. In FY25, KreditBee pulled in 2,700 crore rupees in revenue, posted a net profit of 473 crore rupees, and its AUM. That's assets under management. Basically the total pile of loans it's actively tracking. Sits at around 15,000 crore rupees. That is mid-sized bank territory, built entirely on a smartphone app. Let that sink in. And every single day, the platform fields 70,000 new loan applications. 70,000. Daily. But here's the kicker. Only 10% get approved. So we're talking 7,000 loans a day, greenlit by an AI system that works like a credit officer who never sleeps, never has a bad day, and can scan thousands of data points in seconds. Your transaction history, your digital footprint, all of it, to decide whether you're worth the risk. That's AI-driven underwriting, and it is ruthlessly efficient. Now for you, whether you're running a small business or freelancing, this is genuinely a double-edged sword. Platforms like KreditBee mean faster approvals, less paperwork, no awkward bank branch visits. But it also means traditional lenders. Your HDBCs, your Bajaj Finances, are sweating. And that competition? That's actually your win. Better loan products, lower rates, faster dispersals, because everyone is fighting for your business now. Digital lenders with 15,000 crore rupees in AUM and AI approval engines aren't the future anymore. They are very much the present. If you haven't compared digital lending options for your working capital needs yet, you're leaving speed and savings on the table. Up next, let's see who else made headlines in this week's funding story. But here's where it gets genuinely interesting. Not just for the startups raising money, but for you, sitting right here, watching this. KreditBee has announced an IPO within the next 12 to 18 months. And it's not flying solo. Leverage Edu and CureFit are also quietly building toward public listings. So think of this $280 million Series E round like a movie trailer. It builds buzz, tidies up who owns what on the cap table. That's basically the company's ownership scoreboard. And most importantly, it lets select investors grab premium seats before the general public even gets a look in. Motilal Oswal Alternates and Premji Invest just bought those seats. When the IPO bell rings, they're positioned to cash out at a serious premium. Now, what does that mean for you? 2 things. 1, a wave of fintech and tech IPOs hitting in 2026 and 2027 means you'll get a shot at owning companies that have already proven themselves. KreditBee clocked 473 crore rupees in profit before going public, which, honestly, is rare enough to actually mean something. 2, a strong IPO pipeline lifts the overall mood in listed markets, which is good for your existing equity portfolio too. One honest caveat though, chasing pre-IPO deals without doing your homework is how people get burned. If the public market prices the company lower than what you paid, that premium seat starts feeling a lot less premium. Bottom line, this funding surge is your preview of what's coming. Stay informed, stay positioned. Follow us for more updates like this. Thanks for watching. And don't forget to follow us on YouTube, Instagram, and X.